and it's about the big business opportunity for realtors, which is fractional ownership. And now I'm going to call upon Sudarshan. I'm going to be asking him a lot of questions about why this is a big opportunity for real estate consultants. So Sudarshan, hello.
Yeah, Raj.
Hi. So Sudarshan, why was Strata founded?
Perfect. So, we've discussed about pre-leased and everything. One thing which we realized that the pre-leased is still, available only to the UHNI audience, right? When you talk about a grade A asset as such, you're talking about 10, 15 crores of minimum investment for another person. Now, this is a huge investment which one has to make, and probably the kind of audience which is available is very, very limited, right? One of the things you would have seen is finding the right kind of clients who might buy those kind of assets might be very critical, especially at the right time, which came out in the poll also. So this is one. Second, which we saw is, so what we do as fractional investment is we co-invest together and buy an asset. This is something which has been traditionally done for many years. Lots of litigation, especially when I've my previous stint as a lawyer, I've seen several litigations happening in that space, wherein, even if there are two brothers or two friends who bought properties, one wants to sell, one does not want to sell, one wants to lease it at a particular price, one does not want to lease it at a particular price. A bunch of those issues is, this is one. Second, many times, to Ram sir, people might be coming and telling, Ram sir, whenever you're investing in any property, mera bhi saath mein investment le lena, right? This is the most common phenomena which happens. And say Ram sir is going after a 30 crore asset, he's sitting on 10, 15 crores, he's ready to buy 50%, and he's 50% he's offering to his friends who, in case jo bhi aana chahte hai, come together and let's buy the asset. What happens in those situations is, I might not see the same liquidity. I might not have the same liquidity what Ram sir needs for me to come and invest along with him. I might not see the same vision what he sees in terms of the growth of the property, etc. Now, this is completely relying in Ram sir's network in general, right? But I say in India, as a matter of fact, and if we can build that platform which is credible enough, through which many people can come together, have a same vision, have that same liquidity, you can go ahead and buy an asset like this together. So then comes a bigger question: is it credible enough? Because I'm friends with Ram sir for several years, I will invest, but yours is the platform, or fractional investment itself is the platform where I don't know who the other co-owners are. Which is what, we decided when we started out, that yes, we'll solve all these issues which were there. And more importantly, make that credible brand where someone can always rely that, okay, I can go here. I don't care who the co-owners are. This is more like a financial investment for me in that. So these were prima facie reasons. One of the core reasons why we started was, like, say I had a decent amount of savings. With the savings in Bangalore or in Bombay, probably nothing I can get. In Bangalore, at least I could have got a good shop in a good location. But these grade A opportunities which are leased to, your Accentures of the world, your Amazons of the world, are amazing properties. Or the capital for me is like an aspiration for me to own it. Now with 20, 50 lakh or a crore, if I had, it's probably my dream forever to consider even buying it, because the more time keeps going up, the asset value keeps going up, the more and more savings I need, and that is not going to happen anytime soon. So having said that, we felt that retail as a huge audience in general is completely deprived of pre-leased or commercial investments in general. We even have like MDs of large IT companies as investors on a platform who sit on 7 or 8 residential apartments as investments, giving close to about 1 or 2%, 3% as return. Whereas, we've spoken, like, even a bank asset gives you 6%, a good commercial gives you 7.5 to 8 anyway, bare minimum. So having said that, we felt that there's a good need for this opportunity where you can bring the retail play and try to bring this as an opportunity. Very critical thing when we started out the entire concept of fractional investment. Now, like you said, this is being done traditionally. It's not something new in general, but the institutional way of doing it is what we are solving as a matter of fact, and the ticket size in general. So these are two core reasons why we felt that this is a great opportunity for us in India as an opportunity. Another very critical thing, and this is something which even Ram sir can concur, many of the investors who they sell the properties to, or you sell your pre-leased properties for that matter, have no idea how commercial investments work. They have no idea what are the pointers to look at when you want to renegotiate the property, or what are the pros and cons, what to be done, etc., etc. So we felt most of the investors who are investing in commercial assets, that's not their core business. They are effectively diversifying their disposable income into something which is a long-term investment in general. So we felt that this is also a great opportunity where you can work towards manage those assets for them instead of personally which they're currently managing. In terms of leasing, releasing, etc., it becomes a huge opportunity and a challenge for them in general. So we felt this is also a great opportunity for us to delve into this entire piece, and that's when the birth of Strata happened in general.
Right. Okay. So how would this compare with other asset classes? Of course, we've touched upon it briefly, but anything else that you want to add right now?
So let me take 3-4 asset classes in general. Right? Let me take gold. Let me take fixed deposits. Let me take residential investments. Let me take stock market. Right? Commercial investments in general, on an average, have given a 15 to 18% return to investors year on year. This is the average, which is rental plus appreciation in general. You talk about stock market, you have the answer in front of you. I don't have to dwell heavily into it, but still on a 10-year horizon, the returns of stock market has given us close to about 9 to 10%. Your fixed deposits used to be very high, and you can see a downward trend of fixed deposits also going in, right? Gold, it is still the safest asset class in general, but then again, how much will one buy gold at the end of the day, right? You can't keep stocking up more and more gold at a given point of time. So pre-leased asset or commercial investment is definitely an asset class which should be a part of one's portfolio and probably should be managed even better. Now, just to give you an example, I mean, to all the realtors here, you talk to any of your clients, you can easily understand that if an investor is coming and saying, I want to invest 2-3 crores of my money, effectively his net worth, let's assume, is about 10-15 crores. That out of his net worth, close to about 50 to 60% of his net worth is usually parked into one asset, which might either be his house or another investment which he has made in real estate. But however, the other 30-40% of his portfolio, which is stock, mutual funds, etc., he's diversified across 10-15 properties in general, right? My question is, why not for the largest part of your portfolio also have a diversified portfolio in general? So this is one of the core reasons why we felt that this is a great opportunity, because when we talk about an ROI for an investor's case, at the end of the year, maine kitna kamaya? What is critical for you to do is to diversify and hedge your risk also. Now imagine if I had 2 properties and both my properties were given to a travel company, my ROI is gone for this year because I'm not going to make any rentals at all. So this was one very, very big pointer for us to look at, is diversification, right? Where today through us, where you can invest 20-30 lakh rupees in a small office asset, and probably we'll go through how you can do it, is he can not just diversify across different properties in the city, he can go after different areas, he can go after different cities in general, and more importantly, he can have a different tenant profile for every property. So even if your BFSI is going for a toss, your FMCG, your pharma, your manufacturing, or your warehousing, or your supply chain is giving you that ROI return in general, right? And is making you that kind of return. So which is what is one of the cores at Strata for them to try to do it. So from an asset class point of view, in comparison, this is far superior, but is an asset class which has been deprived to 95% of India, and probably a little more also in general because of the high ticket size.
Right. So, is this similar to REITs? And if not, what's the difference?
So we are more of a private REIT. REIT is, I mean, in a very layman's language, you invest in a mutual fund, you invest in a stock directly, right? So REIT is a blind pool. You have no control of which investments it is, where the rents are coming in. Like say Embassy REIT, which is one of the best success stories as a REIT in India for that matter, has hotels as a part of that portfolio in REIT, which obviously is now going to take a major toll in terms of the returns it can create for the investors. Also, second, which is very critical, is REIT at the end of the day is a very volatile investment in general. You talk to our wealth world in general, they'll say, for me, REIT is equivalent to another stock or an HDFC which I'm buying. That's how I look at it. So this is more volatile because it's affiliated to stock market. So if anything goes wrong in US tomorrow, your REITs or your stock market in general would tumble, unlike a commercial asset in comparison. So this is one, the way we operate, you are taking a more informed decision. You're not investing in every asset. You can choose which assets you want to invest, how much you want to invest. You know which micro market it is, who are the tenants in the micro market, how much rents are they paying. We plugged in with PropStack, which is one of the largest data analytical company in India. They're one of our investors as well into our company. So on a real-time basis, you can track onto their platform all the sale, lease, loan, mortgage transactions for retail, warehousing, for office assets, for residential, etc., through their platform. Now, by plugging in that, you have complete access to that information to an investor. The price at which I'm buying, is it the right price or not? More importantly, assessing the other tenants in the other premises. Like for instance, Just to give, I mean, Embassy is the only example I can give, unfortunately, because they're the only REIT. There is a upward trend which you've seen from a 300, 320, 350 rupees a REIT, which jumped up till 470 rupees. Now, question as a fundamental question is, has the property value under the REIT also jumped a 50% escalation or 50% price appreciation, like how your REIT has grown up? That's not happened at all, because this is the first of its kind. Hence, you see a huge thing. But if you look at a global landscape, the kind of REITs which are existing, whether it's Ascendas REIT or anything, the best performing REIT annually grows at 4 to 5% and gives a return of close to about 5 to 6% to investors. So it's very different in comparison. It's very new, so it's still very early days to comment as such. But this is far more informed in general for an investor as a decision making, like a mutual fund versus a stock market investing. So that's how it is.
Right. Okay. Could you also explain how you guys work?
Perfect. So if you look at Blackstone, you look at all these big developers. The way they do is the institutional way of investing, which means they will float an SPV, a private limited company or an LLP, and they will buy the asset through that. Now they do it for 2-3 reasons. One, when I want to flip it, I don't have to keep paying stamp duty again. I can just transfer my holdings of my unit and I can walk away. Second, it's completely transparent in general because you can track all the bank statements and everything around that. Because like I said, on mca.gov.in, you can track each and everything in general. So the way we also do it is we float an SPV, a private limited company. Investors invest into the private limited company. All the securities which are given to the investors is put in their demat account. So it's completely transparent again at the end of the day. They can track on the MCA who are the other shareholders. We obviously give them access to, but they can share all the, they can know all the other investors, who are the other shareholders, how much have they invested. We've gone one step further. The bank accounts of the SPV, which is the private limited company, is also plugged into the dashboard. So on a real-time basis, they can track all the debit credit which is happening at the SPV level to the investors, because nobody has ever done that. That is the amount of transparency we are bringing. We've gone another step forward, or rather 2 steps forward. We've now got one of the largest trustees on board. They are the ones who act as trustees, which means we don't operate the bank accounts of the SPV2. We've got an independent agency. All these big funds, whether it's a Motilal PE fund, Piramal PE fund, etc., they all have trustees on board who operate for them. So we've got them also on board. They are the ones who operate the entire structure of the SPVs in general, and we've appointed HDFC Bank as custodian. And considering we have integrated with PropStack and we sit on all the data, there's insane amount of transparency which you're bringing in, because they can now track what is the actual value of their asset also on a real-time basis based on what are the rentals they are getting and what are the other rentals the property is able to generate. I mean, the calculator what you have is ideally one of the best ways, where on a real-time basis, even if they've invested for 3-4 years, it'll be very easy for them to identify what is the capital value of their investment in them. So this is a simpler way we do it. Again, whenever any investor wants to exit or enter, it is simple. It's a simple demat to demat transfer and they can do it. Now, the structure, what we've done is the same structure what the big funds also operate, or like how I mentioned earlier. We've gone, the another critical thing is we issue 2 types of securities, a little technical in general, but a question can be asked is, okay, you might be paying taxes at the SPV level and then you're again going to be taxed at your hand. So we've solved that issue. We issue securities such as debentures to investors as a part of their investment. So whatever the rate of interest, whatever the returns they are able to generate as rental returns, we make the coupon rate of the debentures proportionately, which means X money comes in on a month-on-month basis as rents and X money goes out on a month-on-month basis as expenses. So there's no taxes or no kind of withholding which happens at the company level. Everything is passed on to the investors on a month-on-month basis itself. Again, because one of the core reasons when we were doing, when we started Strata was that, okay, today stock can be bought digitally, gold can be bought digitally, mutual funds can be bought digitally. Why not real estate? So we brought the entire process where the entire process of investing is completely digital. There's no physical format of anything which an investor, the only thing which is physical is for me to go and register the property with the registrar is the only physical thing in the entire process of doing things. For the investors, the amount of transparency, second, the amount of opportunities which are coming at these low ticket sizes is one of the core things what is attracting investors and partners to start working with us.
Okay. And has this been done before?
So to give you a very larger perspective of how this space has been from an investor point of view globally also. So there are companies in US like Cadre, cadre.com. There's a company called CrowdStreet. There are companies like Reality Mogul, just to name a few. This as a concept has come in only 5-6 years from now. This has not been a concept the institutional way or the more organized way of co-investing together. So what you've seen is these companies like Cadre, 5 years old, managing close to 3 billion in AUM. CrowdStreet, 6 years old, managing about 1.5 billion. Reality Mogul at about 2.5 billion in AUM. Like 20-30,000 crores of investments which are going in the fractional investment. In fact, that ticket size in US is only $50,000 as a minimum ticket size, which is close to about 30 lakh rupees, which is what our ticket size is also, about 20 lakh as a minimum ticket size. So globally, this is acceptance. We've started out, it's been 9 months since we've started out. We've almost closed 4 assets, managing about 82 crore, as assets under management for investors, and been disbursing rents since August in the previous year, where our first acquisition happened, and we've been trying to do that. So we see this as a huge fundamental shift in the way people are going to invest in this space in general, and this is where we are here to latch on to this opportunity.
Right, great. So with that, we also want to talk a little bit about the big business opportunity for realtors.
Yeah.
So would you be answering that, or we pull in Nihar for that?
You could pull in Nihar as well, and I can probably give in a liner. For realtors in general, we partnered with them because something which we realized that we want to be a manufacturer. We don't want to be a distributor in general. What I would rather want to focus on is to go more deeper into tenancy relationships. I would rather want to go more deeper into property management, see if I can enhance the value of the property and sell it for my investors later. So this is something which is core to us as a manufacturing organization. So distribution is not something which we look at. So we open it for partners. Hey, you distribute it to your clients. It's our duty to give you opportunities. In terms of transparency, we prepare a video so that they can know where the asset is, because we have, 20-25% of our investors are NRI investors who obviously have not seen the asset, are investing. So we give them the entire floor plan, the details. We've got the tier 1 law firm as our lawyers. So these guys are, as lawyers, usually for a 5, for a 10, 1 crore, 2 crore assets, you don't tend to take those best law firms because the fees are very high. But because of the scale of operations which you're able to do at a macroeconomic level, the cost of the legal for an investor comes down to a few thousands of rupees. So these are things which are critical for realtors. 2 things. 1, this is new, this is fresh, this is exotic. This is not something which is the same old stuff for investors. This is highly transparent. The data play which we talk about, where they get to know all the other owners in the other property or the other tenants, how much rents are they paying, when is their lease expiring, etc., is something they've unheard of. So this is something which is catching on. We've seen that thing. Second, for realtors is many of your investors who you have already sold a residential apartment are also still looking for an investment, but they might not want to make another residential investment in general. So this is perhaps a good way to tap to those customers who you are tapping, but not able to convert in general. This is a small ticket size and getting them a good amount of returns in general. And probably even Ram sir can tell you, right, for a crore also, you can't get a good pre-leased assets anymore. So this gives you an opportunity for tapping those investors and make that income, as a distribution fee, which we offer, which is going to be critical. Nihar can answer more questions.
Right. Okay. So you spoke about a lot of transparency, etc., and so on and so forth. So what is it that you guys are doing for channel partners?
So for channel partners, what we made is we made an entire B2B dashboard. So channel partners can log into that. They can do a simple KYC. KYC for a client is simple: PAN card, address proof, bank statement. It instantly verifies within a second itself. And once their KYC approved, they can continue investing. For channel partners, they can track all their client investments. We've gone ahead and made family account structure as well, because these are tax planning investments which investors do. So hence we've created family accounts. So somebody wants to invest from HUF company, from their trust, or whatever they want to manage, one login ID, and they can do. You as realtors can track all the investments they may be making for themselves as investors, or based on your advices in general. This is one. Second, all the collaterals which we make, and you guys can go through strataprop.com, but all the collaterals which we make, we offer it even white labeled on the platform in case you want to make it completely on your logo or in partnership with Strata. At a click of a button, available for you to access that as well. Very critical thing. through this dashboard itself, you can follow up with your clients in case they've shown interest. You can track which stage they're in. Have they given you the token advance in general? All that is also permissible through you on the dashboard. We offer three types of payouts for investors. There is an upfront fee. There is a trail fee where there is a fixed amount of income which is going to come based on the
You
investment.
mean realtors, channel partners?
For channel partners, yeah, for channel partners. Realtors, I'm sure, is developers, but yeah, for channel partners. And we have an annual bonus program based on the AUM one is able to generate for us. There is another bonus program which is enhancing whatever returns they're making by a sizable as high as 30-40% of whatever they're making. So effectively making an entire ecosystem for the channel partners, and something which is very critical for channel partners, which they're always worried, and something we really deeply like to be as partners and not competitors, is once a client is invested through you, we map that client to you, and any other investment made by that client in future, we still pay you for that.
Wow,
So this
that's
is to
fantastic.
always ensure that the clients are always your clients. They're not taken away by anybody else. This is something which we dearly take for, and something which is critical for us at the same point. Another thing which we are going forward, and which is why we are going all out in B2B, is all the investment opportunities which we will be bringing going forward will be always first available exclusively only through the partners, through their platform. It will not be available on our website, which means the partners will always get the first right and an exclusive right to sell their assets or sell or distribute these investments at all. It will not be done directly by us at any given point of time, unless a particular period. We've right now mapped it as 3 to 4 weeks. After that is when we'll open it on our platform, and in case somebody wants to do it. But that 1 month of critical time is what we are giving to our investors, to our partners, that you can bring in your investors and you can start investing. So we're not competing. We want to be partners, and hence this is what we built the platform and the entire dashboard for.
Okay. What's the minimum ticket size?
So today our minimum ticket size is 20 lakhs. That's what we do for investors. This 20 lakh is all in. There's nothing which an investor has to pay over and above that. Just to give you a perspective how we come and derive a property value is, let's say, if it's a property value is 20 crores, we end up raising about 21 crores 80 lakhs, about 6 to 7%, which is your stamp duty, some bit of legal fees, reserves, and a distribution fee, which we factor in into this. So an investor, when he invests 20 lakhs, if he's making, so an average, we are giving about 8.5% returns across all our 4 properties, a little more than 8.5. So net 8.5 is what they get after deducting TDS, is what is paid to the investors on a month-on-month basis. Whatever fee, which as a distribution fee, is something which is available on the dashboard for you to track. Like I said, that annual bonus program is critical, so you can track how much more business you could do, which will enhance your returns by another 40%. Is something which is also available for you on your dashboard to access.
Right, very interesting. So could you elaborate a little more on the incentive structure?
So on the incentive structure, like I said, we have an upfront fee model where we pay 3% to our partners for referring any client. Like I said, the minimum ticket size is low. It's 20, 25. There's no upper limit in general. So clients can invest as much as they like. There's a clear dashboard. They can track. They can do this. This is never something which they've ever done in their life, especially in India for that matter. So this is something unique for investors from a point of view. So we pay that. That is one. Apart from that, we have a model which is a trail model where we pay 2% upfront and we pay 0.5% or 50% of whatever management fee which we charge to our investors for managing the investments. That is paid to the partners as well we paid on a quarterly basis for now, trying to see if we can make that on a month-on-month basis as well. So that is also going to enhance the returns for the investors. So just to give you one step back, we charge 3 types of fees to the investors. One, we charge 2% as asset acquisition fee, which is effectively our distribution fee to pay and remunerate our partners. So that is 2% inbuilt in the, say, 22 crores, which I'm raising for a 20 crore asset. 1% to 0.75% is what we usually charge as asset management fee every year. Now, what all gets covered as an asset management fee is insurance of the asset, GST filing, TDS filing, rent collection, rent payouts, auditing of the SPV on a yearly basis with the big fours, releasing the asset. The cost of releasing is also something which we are happy to bear it, which means the assets which we choose, and I spoke so much about diligence. The way we try to select the assets is probably from our hidden interest point of view, because we don't want to take the effort of finding another tenant over the next 5 years at least, for that matter. So this is also something which is covered, and we take a performance fee on exit that in case you make an appreciation alone of beyond 8% year on year, we take a 20% of that beyond that, which means if you make a compounded, I had put a crore, I made 1 crore 50 lakhs at the year end as appreciation alone, not the rentals, which means you made 10 lakhs over and above the 8% hurdle rate at 40%. 20% of that is what we charge as an exit fee, and we even share that to our partners based on the AUM we are able to generate with them. So this is how much we are taking care of our partners as of today.
Oh, that's great. So it's a very interesting model because you're also you will also be making money on the appreciation, which means that you will look for properties that will get you that kind of returns plus appreciation.
So we don't charge management fee if the property is vacated. Those respective months, the management fee is not charged at all. The reason we keep reserves is because of these unforeseen costs or common area maintenance which we need to pay or whatever. We keep some money as reserves which we raise upfront from our investors, more like a sinking fund. But effectively, this is what we do so that this concept is something which has to be something which has to grow, because we've seen the way it has grown in US. Like Cadre, in 1 year sold close to about 7,000 crores of properties. Now they sell hotels, they sell resorts, they sell multifamily homes, everything, because of how big this space has become in general for them in the US. So we see this India as a far bigger opportunity in general for us to tap and create, especially in these times where investors are either cash strapped or looking for better diversified portfolio and passive income. This comes in as a blessing in disguise. When we, as partners, when they propose to the clients, this is something. And I can tell you, we have close to about 3,000 signups, 4,000 signups on our platform yet. Close to about 150 plus investors have invested into our properties of the 60 crore AUM which we currently sit on, not factoring the current asset which we were doing in. Having said that, we've seen that there is a word of mouth which spreads as well. And this is something which is going to be critical for partners, because like I said, any asset, even if they come to our platform directly, will not be accessible to them. It will always be accessible only through you. So this is something which, as an asset class, has to grow. You have to bring retail into commercial assets. It's only when this space can grow even bigger and bigger. I mean, you hear Anurag speaking Strata sale. There's so much inventory which is available. But if the ticket size is still 20 crores, the target audience you're trying to go after is extremely, extremely small. And they're already bored and they already own too many assets. Like Ram sir had told, the guys who are selling are already the HNIs in general. So we are now opening this Pandora box to the smaller investors. And that's where we see a tremendous opportunity for partners and us to continuously keep growing.
Right. Very insightful. Also, a few other questions. Is a loan or a lease rental discounting, for a fractional share, is that possible?
So as of today, there is no. It's pure equity funded. We're working with two of the largest banks to create a product wherein a loan would be given for investors on this. This will take another time because the liquidity is dried up for banks at this point of time. But something which we are in very, very late conversation with few banks and creating an entire digital approach of giving loans for the investors itself through the platform. You're talking about 9.5% loan rates is what we would be offering. LRD, unfortunately, no, because this is not a product which banks understand yet. They're seeing the opportunity because we have one of the banks looking at investing into our company itself. So they see that this is a big opportunity in general for them in India. And hence, we are working with them on a loan product around it. But as of now, no, there's no loan product.
Mm-hmm. Okay. When the SPV is formed, who will be the signatory?
Correct. So, which is what trustees come in. So trustees are the signatories for everything. We have independent directors we have appointed. So these are there are agencies which all the big fours and big companies, large MNCs they have these independent director agencies who get appointed. The role of an independent director is very, very minimalistic apart from GST filing or anything. Something which is core for investors to identify is, okay, what in case you go and leverage this property without me knowing about it? What in case I want to lease this property and who's taking those decisions, and more importantly, when I want to sell those property, who's taking those decisions? So we have put those, how like a fund you have these charter documents. The SPV also has charter documents, which is your articles of association, as well as the agreements which we execute with you. So clear three norms. If any property has to be leveraged, 100% of the shareholders have to give approval in writing, otherwise it doesn't. Again, digital writing, we don't take anything in physical. Second, with respect to leasing, we are asset managers on their behalf, which, so if still we are available, we take those decisions on their behalf and we give them access to all the other lease and sale transactions. So there's complete control they have with respect to what price leases and sale are happening. But if we are not available, let's assume they have the right to terminate us. In case we're not, then 51% shareholders approval is required for you to go ahead and lease the property to at any price you want to. And very critical, whenever anybody wants to sell, and probably we'll come back on what are the liquidity options in which one can exit this investment, is where 75% of the people say yes, sell the asset, then the director can go and sell the investment sell the property for the investors on their behalf. So
Okay.
these are three core factors which we have factored in.
What happens if the tenant vacates?
Correct. So those months where there's no tenant, your debenture rate of interest becomes 0.001%. We obviously don't pay you rents because at the end of the day, we are asset managers on your behalf managing the asset. We give you every detail, like I said, the financials of the tenant, what are the other properties the tenant is. Like for instance, if Accenture is a tenant in my premises, I can tell you through the data we have is what are the other rents Accenture is paying across India. So if your rent is at a very, very high price, this is a classic example for you to do an average that will Accenture continue staying in my property or not. Just giving you an example. So these are things which is there. We don't charge you rents for those respective months. Don't charge you property management fee or to investors, but they don't get paid if there's no tenant. So this is not an assured rental product like how several other products are available in the market. This is more secured because the asset is completed, it's leased out, legal clearance has been given by a tier 1 law firm. So you're entering into the asset only after that. So even if you're making 1-2% lower than another under construction property and assured rental product which you're going into, this is far safer in comparison as such. But like I said, we don't charge you rent. Don't charge you fee, and we don't distribute if there are no rent, if there are no tenants.
Okay. What are the tax implications for a company or an individual?
So at the SPV level, there's no tax. X money comes, X money goes out on a year-on-year basis, on a month-on-month basis. So SPV is effectively claiming depreciation and is a loss-making entity for all practical purposes. Everything is completely taxed at the hand of the investors. So the investors, based on their respective income tax slab, is what they will be taxed upon. Once we formulate the loan product is when this will become even more lucrative for ultra HNIs and HNIs, because they will now start looking at this as an opportunity where whatever rentals are coming is going as interest. So whatever profits I'll be generating out of this property, I'll only be taxed capital gains, which is 20%. And I can take indexation benefit of 4 to 5%. So effectively for a large investor or for an investor who wants to leverage, this is great because he can try to reduce his taxes as much as possible. But again, because the ticket size is small, you diversify across 4-5 investments into your family. Don't invest everything through one. We've seen people who invest through their HUF, through their company, through their wife's account, through their father's account, mother's account, purely from a tax saving point of view. So this is the best way which one can do as well.
Okay. What happens if the investor wants to leave midway?
So great. So we have 5 liquidity options in which we have created for investors. One, I told you about asset sale, which is the best in general because you would also want to enter into an asset. Let's assume how Ramsar had told that go and sell a property considering you are going to buy it. So you need to understand as an investor, if you are going to sell a property, you need to ensure that the buyer is interested to buy as well. Which means first is an asset sale. Complete asset sale is the best way to sell it because you're finding an entire buyer who's buying the entire portion of it. Best times to liquidate is when the property gets released or the property is, that's due for renewal in their lease negotiation. That is the best time to exit the property. So 75% approval we get. That is the first approach in which we sell the asset. One step back, which is important for investors to know is, okay, what is the value of my property today? What is the value of my investment? If I invest in stock market, I clearly know what is my net asset value, what is my NAV of my investment. In mutual funds, I completely know. In fixed deposit, I know what is the money I'm going to get out of the maturity. What we've done is something at an algorithm level as a tech company, and we're working with one of the IPCs and doing something on those fronts, is based on whatever lease and sale transactions which are happening in the building and the vicinity. We have an algorithm which discounts at an 8% and derives the value per square feet. Which means if an average rental is about, say your property is getting only about 60 rupees per square feet, which is say 70 rupees, 720 rupees per year. However, the average rents in the building are a little more, and the annual rents are about 800, 850. Your property value will be prescribed as 10,000 to 10,500 rupees per square feet. So this is something we do based on the value of all the sale and lease transactions which are happening. We prescribe the NAV and derive the value. This is one. Second, from these IPCs, we take a valuation report every 6 months. We've tied up with one of the largest IPCs. We take a valuation report from them every 6 months. A median of these two, based on the real data and based on the valuation done by a reputed agency, is the value of your investment. So we prescribe the NAV accordingly. So at the end of every 6 months, you know what is the actual value of your investment. So at the end of, first is asset sale. For the first 3 years, we don't take any effort in terms of selling the asset, because this is a long-term investment. We want investors to stay longer. That's when you can derive the actual value of your investment. So having said that, at the end of 3 years, every year we call and do an online poll. If investors say yes, sell the asset, we get 75% approval. We work towards selling the entire asset for the investors. This is first approach of sale asset. Second is, again, where you guys can be very critical, is private sale, where there can be an unit transfer from one investor to the other at any given point of time at whatever price you want. We prescribe the NAVs. You want to sell it at a premium, you want to sell it at a discount, we don't get involved. All we want is the other person who's investing to simply just do the KYC with us and invest through the platform and buy the units. It's demat to demat transfer, so hence it's extremely seamless, and the transfer can be done within minutes in general. Third, we have a resale market which we've opened onto our platform. So anybody who wants to sell at any given point of time can just come and say, hey, I want to sell it. In the resale market, all the units will be only listed at the price what we have prescribed as NAVs, and that is the price at which you can do. Again, we give you all the data, we give you all the reports. So it's not something which is irrational, but you can sell it at that price. Fourth, very critical, is a dedicated window, a dedicated secondary market which we open a window where we prepare reports about each and every property and the vicinity, how it is performing through all the data and all the other reports which we go through. And based on that, all your units will be listed at a 3% discount. It's for you if you want to get into it, if you want to opt in. It's a way we are incentivizing buyers. Okay, why don't you come and take up 15% discount? This will enhance your yield in general, and you can come in. Fifth, something which we are working closely is with these aggregator platforms like 99 Housing, Prop Tiger, Magic Bricks, etc., and creating a marketplace for secondary transactions of units. So which will also create a big appetite for smaller investors who come on these platforms. The premium ones don't go to these aggregator platforms, but the smaller ones to look at and get into these secondary options. One very interesting thing and is very ambitious is we look at ourselves as more a feeder to large private equity funds, because the kind of transparency and diligence which we have, private equity funds today, like say Blackstone bought one entire block of 1 DKC for 3,000 crores. There's no diversification for them. It's completely concentrated risk in one property in one market. We see the smaller funds which are having 400-500 crores, 1,000 crores to deploy. We see and become a feeder to them, because we can have a bouquet of a portfolio which we can offer to them, which they can adopt. And yes, we are professional asset managers which will be managing on their behalf as well. So these are ways in which one can liquidate their investments out of their investments they've made.
Mm-hmm. You mentioned that there is no upper cap on investment from a buyer. So if your asset is about 20 CR, can one guy buy it if you've got an investor?
Yeah, so we have three limits. One is the minimum ticket size. Second parameter is 25% is the maximum, because in case he has more than 25, then he can block the sale of the asset. So that is one. The third, after 25 is directly you can own 100%. We obviously discourage 100% ownerships today, because this, we want to build this asset class to the thing. And it's not that we list an asset every month or every day in general. We take about 1.5 months, 2 months, and we list an asset, because there's so much of diligence which we do before we buy any or list any asset, where we put in our buy-in in terms of token advance and we take the asset onto our platform. So having said that, one investor is something who we discourage. It's not that we avoid completely, it's something we discourage, but because we also tell them that, hey, why don't you build a portfolio with us, invest in 10 properties instead of investing in one property itself. So, it's more of diversification, which we pitch to them as well. But again, from a limitation point of view, minimum ticket size 25 or 100. these are the three limits what one has.
Okay. So what happens if the investor gets another person? Does the realtor benefit? The channel partner benefit?
Correct. So, like I said, even if the investor is bringing somebody else, he effectively can't invest because I'm going to give that exclusive access only to the investor, to the partners and property. So, even if they come, there's no investment for them to make it at the first place. So, again, very clear, Raj, for us is partners are partners. That's why they're called partners. We're not competing with them. We want to be more focused on ensuring our acquisition of properties at the price at which we want can become better and better. We get more and more partners who we can work with, which means if I can absorb better properties and more, my acquisition price can also be negotiated at a much better price and go more detailed in terms of servicing the tenants, managing the assets in a better manner, try to improvise the asset to see if we can maximize the value of the investor. So something which is very core to us. We are a clear manufacturer. We don't want to be a distributor at all. So there's no way where we would like to cross roads with a partner and try to cut them off because it's too small for us to even consider.
Mm-hmm. And what about, do you have ladder incentives as well?
We do. Like I said, there's an annual bonus program. So apart from the fixed fee, which is there is based on the AUM which partners can bring onto the platform. The percentage just keeps going up and up. So there's tier 1 to tier 7, from as low as about 2.5 crores to a maximum of 25 crores is the tier system which we made. Is the annual business which has to be brought in. Based on that, the value keeps increasing, as well as the performance fee which we charge on exit is also something which is shared to our partners.
Mm-hmm. What we'd request you to do is register for a free account on prorealtors.in. We are going to share the updated template with you once you register. Also, we'll keep you in the loop for our next webinar and the ones after that. And of course, most importantly, as you saw, we are going to help you convert more deals. So with that, I'd like to thank Ram and Sudarshan, and of course all the participants who've been patiently hearing us out. And I'm very glad that we could do this. And any closing remarks, Ram?
Yeah, so thank you, Raj, for taking this opportunity. Sudarshan, that was a huge learning for all of us that today, if I get an investor who says I have 25 lakhs to invest, no, I know that there is a possibility for him to behave like a UHNI, and not shy away from the fact that he can afford 25 lakhs today only. So for us, and the best part I like is the way you're talking about the transparency, that everything is on a dashboard in real time. With because for brokers, it is very important that there is transparency for them and their client, because for us, these clients are our lifeline, and we would like to always keep these clients as a spear. Before we sign off today, I have 2-3 things to share for my realtor fellows here. Is in this lockdown, please use the time. We are not sure when this lockdown is going to open up now. Please use this downtime to learn some new skills. Second is get into an alternate stream of income. And I think, Sudarshan, what a better way of alternate stream than your company offering. If you're only doing residential, get into pre-lease. There are a lot of things you can do by, because you have the expertise already, you are knowledgeable, you are a storehouse, you are a knowledgeable person with so much of years of experience. So get into alternate streams or vertical that you are not working for. Look at, this is the time you can do research, you can speak to a lot of your friends. Every consultant here has something called a sphere of influence, and these are the clients that will stick with you. COVID, non-COVID, disaster happening, not disaster happening. They look upon you as a friend, as a family friend, where you guide them. So this is the time you should do it. Very important thing, Sudarshan, you used a word called credible network.
Yeah.
It is very important to have a credible network of probably clients and other realtors. I would like to take 1 minute to say that wherever you are, try and be a part of a local real estate association, and also try and get into an association called the NAR India, which is the National Association of Realtors India. Their punchline is the credible voice of realtors. So try and get organized, get into some associations which are in your city, which are affiliated to NAR India. There's a lot of education happening. There's a lot of trainings happening. And the best part is, you suddenly have access to 38, 40, 42 cities across. It is like you have branch offices. So today, to give you an example, if I get a pre-leased inquiry from my HNI, NRIs who are abroad, I offer them at least 7, 8 cities at one go. So I have my friend called Amit in Chennai. I have Nishit Shah in Ahmedabad. I have Mr. Ravi Verma in Pune. I have all these friends who are part of our credible network. My access to do business is suddenly gone up high. And today, trust me, if you have inventory, you are the king today. So with these closing remarks, I wish you all a wonderful evening ahead. And thank you, Raj and Sudarshan. Thank you for this wonderful insight that you have given us into fractional ownership.
Thank you, sir.
Yeah.
Thank you, everybody. Sudarshan, any last closing comments?
No, great, Raj. First, congratulations. I think it was a great session. The kind of response you could achieve was phenomenal. I think 400, 450 people attended from the 500 registrations. That's a 90% hit rate, which is really, really awesome. So shows, and majority of them stayed in this extremely long session in gentle.
Yes.
Speaking, I hope it was fruitful for all of you. Ram sir, it was great to learn a lot about you, because like how Raj sir has already just told that, you are not the prop tech guru, but you're the guru in general. There's obviously a lot which we're learning, and kind words coming from you is great. But again, as a concluding remarks for realtors, for partners, usually, like how sir told, best time for you to equip yourself better. More importantly, for you to attend more sessions like this, understand, because your clients look up to you. They want to know what is happening in the industry, because everyone is so concerned. You will find Deepak Parekh once mentioning that 20% of correction hone wala hai. But the reality is very, very different. As a matter of fact, they want to understand. They are reading a lot of stuff. WhatsApp University is on a different high altogether, where a lot of information is getting misled to investors. That is critical. Very important, especially for partners, is look at NRI audiences now, because they are ones who are now looking at India as a bigger opportunity, especially in these times. So, again, like how Ramsar told, best time to equip. Hustlers are those who make the most of this opportunity and not watch Netflix all the time. So that's what I would have my concluding remarks.
Thank you.
Right. Thank you. That is fantastic. And with that, we'd like to close. And of course, Ram, a great time to use technology platforms like Pro Realtors.
Absolutely.
All right, great. So with that, thank you, everybody. Please go and register on www.prorealtors.in if you haven't registered already. We'll be sharing out details of Strata as well.
So just for partners in Bombay, Vaibhav is our investment associate in Bombay. So anytime you would like to meet him, speak to him, he's the go-to guy. That's his phone number and email. We also have our director of investment also sitting out of Mumbai, Nihar. He's also there in the session. He's also somebody who you could always reach out to. Vaibhav will share his coordinates also to you in case you would like to know more. I'm sure there might be a lot of FAQs, a lot of questions which might still be there. I'm happy to answer it. Probably in this session we couldn't cover everything, but happy to take one-on-one calls with everyone as well in case you would like us to answer any of the questions.